K-Man's greatest hits. This is Gold with Brent Harbour. It's LOM's Wealth Wednesday. Now, we've got some great topics and advice today. But first, Lewis, you got someone new on the team at LOM.
Yeah, no, we've got Daisy. Daisy Lyons has moved down from our head branch in Bermuda.
Yeah, I did.
So, she's a member of the Lyons family, who are majority owners of the firm. And we're very happy to have her here. And she's going to be running a few different projects, which I'm sure she'll be eagerly updating you on throughout the year.
Yeah, we have a lot of exciting things planned for 2024. Got a few educational seminars planned. We like to have something every quarter, something that involves the community, but also something for our clients. So yeah, you can look out for those events on any of our social media platforms. We usually advertise them on LinkedIn or Instagram, Facebook, or on our website. So any of those. Or you can just listen on the radio, because every month when we talk, we'll probably announce the next one that's coming up.
That's awesome, Daisy. Thanks very much for that. Now, Lewis, we've got a lot to talk about today. The first thing I want to cover is the difference between saving and investing.
Yeah, absolutely, Brent. In brief, savings involves setting money aside in safe liquid accounts. It can include checkings, savings, money market accounts, provides capital for investing, putting it in the stock market, for example. It does lose its value potentially with inflation, which in the high inflationary environment, when you save money that's not working in the market, you have an erosion of your capital. So there's always a balance between saving and investing, and getting that balance right is one of the biggest questions we actually get, Brent, from people just calling in, even our own clients. And then the other side, investing. So that can potentially increase your capital. Okay, that includes stocks, bonds, real estate, gold. Some people like having gold coins, which we also do here at LOM. And you're more likely to beat inflation over time. And really investing is about investing over the long term, okay, on a 3-5 year, 10-year horizon, or even planning for retirement, which we can talk about a little later on, Brent.
The trouble is that people often feel that they have to choose between one or the other, right? Saving and investing, but they're not mutually exclusive, are they?
No. Listen, having a little nest egg available for unexpected costs is never a bad idea. So you don't have to necessarily just be a saver opposed to being an investor. Okay, it's good to have a few months of your wages put aside for a rainy day in case of redundancy, or for example, the COVID pandemic. Lots of people lost their jobs over that. So if you had 3 or 4 months in wages saved just in term deposit or money market account, something like this, that's always prudent. And then once you have that cushion, if you will, you then invest your money. Okay, you invest it, you plan for retirement, you speak to an advisor, and you set your objectives for the future.
So do you think people get scared when they hear the word investing? I mean, for most people, it probably just screams high risk, right?
Yeah, it doesn't have to be high risk. You can invest in, bonds. The interesting thing is, especially about the last couple of years, is when interest rates have gone up, that means that bonds, all of a sudden, treasuries are starting to pay high yields, okay? So you can start talking about money market funds and fixed income funds and fixed income portfolios, just buying a couple bonds to complement your stock portfolio, for example. And those are low risk investments, okay? You're effectively buying debt and you're getting a yield back for that. So at the minute, safe yields around 5-6%, 1 year out. Typically speaking, as you buy bonds of longer durations, they typically pay more. But yeah, absolutely. It does not mean you have to have a high level of risk. You can have a balanced portfolio. You can have a low risk capital preservation portfolio. There are many different things to invest in, Brent.
Yeah. And I think you have to be patient as well. I've been guilty of panicking when something happened, like with COVID, for instance. You want to take everything out of investment and throw it into a bank account and keep it safe, but you really have to hang in there, don't you?
Oh, you do. I think Buffett's the saying, when everyone's scared, I'll get greedy, and that is typical, really. When you have these big moves down in the market, historically speaking, they're always buying opportunities, and that's what we've seen. The last couple of years have been, very, very difficult in the stock market. But as you can see now, we're starting to get back near to all-time highs. Investing stocks, but investing for the long term. There's always an event. Oh, this one's different. I've heard that thousands of times, and it never is. Okay, even when you shut down an entire economy, the stock market will go back up over time. It may take a long period of time. It has taken a long period of time to get back to the levels we are now. But there are many different tools of which federal, central government, the central banks, can use at the disposal to help markets and help individuals. And it's interesting, we're actually near or at peak interest rates at the minute. So we may see interest rates go down over the next few years. And that's typically a good environment for the stock market.
Yeah, absolutely. Lewis, just going to take a bit of a break. When we come back, I want to talk about why it's important to set financial goals and plan for the future. It is Wealth Wednesday on Gold, chatting with Lewis from LOM. Now, you can call them anytime on 233-0100 or pop in, grab a coffee and see them at Commander Bay. Cayman's greatest hits. This is Gold with Brent Harbour. It is Wealth Wednesday, and we're getting some fantastic financial advice from Lewis Cohen from LOM Financial Cayman. Now, the other thing I want to talk about too is setting financial goals and planning for the future. Why is it important when you're setting your financial goals that you identify what you want to achieve with your finances?
Perspective, in a word, puts things in perspective for you. Some people want to buy a nice watch, or they want a new pair of shoes. And then you start talking to them about, their life and what they want to achieve for their family. And they start saying, well, I want a house, or I've got a new one on the way, so I need to buy an SUV, a bigger car for protection. That's going to cost a little bit more. So once you start identifying your goals and really going through what you need to do, not only for yourself and your family and your financial security in the future, it starts putting things in perspective. You can start listing them in levels of importance. Okay, so I need to get a house with an extra room. Okay, I need to get a new car. I need to do, all these different things. So having goals and setting them allows you to put things into perspective and plan accordingly.
So planning is the key. How can individuals effectively set financial goals, Lewis?
The best way, personally, is come and speak to us. Come and speak to a qualified advisor, someone who can sit down and take you through a whole host of questions and really that outlines things for you. Failing that, sit down with your partner or your family and discuss what you need to do and what you need to achieve. I always recommend seeking professional advice. We offer free consultations, doesn't cost a thing. Come in, talk to us. We help people, invest over the long run. But having a plan is a necessity.
So let's talk about the why behind financial goals. How does understanding the reasons behind our goals help us make better financial decisions?
Yeah, like I said, perspective, it helps put things into perspective. You can list them in terms of importance. For example, did you want to start an investment portfolio for your children? Did you want to try and give them a helping hand in the future? Things like that really do help put things into perspective.
Yeah, let's talk about that, because I've started doing that with my children, actually, starting a portfolio for them.
Well done.
So what potential benefits does it offer them, and how does it help in the big financial picture?
Yeah, absolutely, Brent. So, what I would say is the sooner you start any portfolio, whether it's for your children yourself, the better. Okay. Compounding really does make a big difference over the long run. And especially for your children. I mean, I'm sure you consider some of these things, but giving kids a helping hand once they're ready to step into the real world will give them a massive advantage over their peers. Okay. You could say the next generation coming through are at risk of becoming the lost generation. We're looking at sky high housing prices, mortgages are through the roof. I'm sure you're aware. Cars are significantly more expensive than what, my parents and grandparents had to pay, for example. And that's before we even start talking about student debt. Some of these students, 50, 100,000 plus in student debt. Now, some people may say that's an excellent incentive for a long life of fortitude and hard work, but I don't think I can prescribe to that personally. So giving kids a helping hand is a real necessity. If you start a nest egg now for your children and let the power of compounding take care of itself, then by the time they finish university, they could potentially pay off their student loan or put a down payment on their first house. The world is a very different place these days, and planning for your financial future is never more important. And I think giving kids a helping hand, especially when wages aren't keeping pace with prices of houses going up, et cetera, has never been more important.
Yeah, I think so. And it's using different tools, because we've done the investing side, we've done term deposit, we've got their savings account where they put money aside for things that they want. So it is a matter of having different things to use for them, right?
What I would suggest, actually, if people are looking at portfolios for children. Invest heavy in equities. You can be very risk on because you're looking at least 20-year horizon. Horizon means the time you want to be invested in the market. So you're planning for your children at birth to when they finish university, for example, you've got at least 20 plus years. So you can be aggressive on the portfolio, invest in growth segments of the market.
Now, on the way after 9 o'clock, we're going to wrap up Wealth Wednesday. Got a couple of questions. First, I want to talk about incremental top-ups and how that works, and also how to best go about making informed financial decisions. It is Wealth Wednesday on Gold, chatting with Lewis from LOM. Now, you can call them anytime on 233-0100 or pop in, grab a coffee and see them at Commander Bay. Playing Cayman's greatest hits on Gold with Brent Harbour, we're wrapping up Wealth Wednesday, chatting to Lewis from LOM. So Lewis, I'm really interested in this. Can you tell me about the power of incremental top-ups to investments, how this strategy works, and why it can be beneficial for building wealth over time?
That's a very, very good question. Power of compounding, incremental top-ups. Let me give you an example, actually. I think it puts things a bit more in perspective and it's a bit easier for people to digest listening to this first thing in the morning. Typically speaking, most investors I talk to will put a lump sum in to begin with, whether it's, let's use $25,000, okay? And let's say they target 10-year growth. We can presume the market would return 8% on an annual basis over 10 years. That's like a market average, okay? So realistic figures. So on that basis, with your $25,000, you would have just over $55,000 at the end of 10 years. So that is what the stock market has done. It's, of course, a good strategy. But what you asked was incremental top-ups. So $25,000, end of 10 years, you've got $55,000. If you were to top up $100 each month, just $100 each month, over that same time period, you'd have almost $74,000. That's what your portfolio will be worth. So the small top-ups, they compound into one another over a long time period and enhance your overall return. So the power of compounding should not be underestimated. And it is most certainly something investors should do and can have a profound impact once you look at a 10, 20 plus year period. So if you're looking at stuff with children or planning for retirement, absolutely fundamentally key in my opinion.
Now, I want to talk about making informed investment decisions as well. So what are the key factors you should consider when you're planning an investment strategy?
Numerous. First things first. And it's an interesting question, Brent, because this is exactly what we do when we bring people in for consultation. You go through what is your investable capital? Do you have money already to invest? That's the first thing. And then you look at, okay, what capital do you have to invest on a monthly basis? What is your investable capital? That is after you pay mortgage, utilities, your tuition fees, your groceries. Once you take everything out, then that is what's referred, typically speaking, although everyone's different, as your investable capital. That's the first step. Then when you start talking about your time horizon, how long you want to be invested in the market, are you targeting growth? Do you want to generate an income? Does the income need to be monthly, quarterly, annually? Do you just want to preserve what you build? Do you want high growth, emerging market exposure? So you need to identify what it is that you want to achieve. And then we start talking about attitude to risk and the importance of liquidity and diversification and all these things. And there's a whole host of other things which we go into from a risk perspective as well, Brett. And really, we could have a whole segment, we could have a whole radio show just talking about this stuff.
So Lewis, for anyone who has been listening and wants to learn more about savings and investing, what are the next steps for them?
Come and talk to us. Our office is in Commander Bay, so drop in. Although you might have to put up with my colleagues, awful coffee, but we won't go into that too much right now. Or you can contact us on 233-0100. For anyone investing, what I would say is all investments do carry a degree of risk, okay? You do your own research, or as I said, come and speak to an advisor, whether it's us or, one of the banks, whoever it is. I think you should speak to people who know what they're doing and have a track record of that as well.
Well, Lewis, it's been wonderful catching up today. And you, Daisy, all the very best.
Brent, absolute pleasure. Thank you.
Thank you so much.